Hey there, Lincoln here from BoAcademy.org. Today I want to walk you through my 2020 recap on Robinhood. If you're new here, you will know that on this channel, BoAcademy.org, we break down investing topics so that we can all understand how to invest better to build long-lasting, sustainable wealth. So I've been covering that all year, and I've been focusing on growth stocks, trying to build my wealth because there's two stages to the wealth journey. First, you have to build your wealth, and then you can maintain it. So I focus right now on building that wealth, and in 2020 I had great success in doing so, and I hope that you all have too. And if you haven't seen your 2020 recap on Robinhood, if you're interested, there's a link below in the description of this video to get your 2020 recap of Robinhood if you're a Robinhood user. And if you're not investing yet, if you're interested in investing, get your free stocks below in the description below. And be sure to watch our Robinhood crash course teaching you how to get a Robinhood account and how to do basic research into stocks and invest in those stocks by buying and selling them. And if you don't know what stocks are or why they're important to building your wealth, we've covered that in many videos too. We've broken down stocks, we've broken down an IPO, initial public offering, we've broken down SPACs, special purpose acquisition companies, we've broken down dividends, we've broken down inflation, and so many other topics that you need to be aware of as an investor who wants to build long-lasting sustainable wealth to enable yourself to retire on your terms. So if you're interested in all of that, check out our channel at boacademy.org or look in the description below for related videos. So we're going to hop right into my recap, but before we get to that, just some housekeeping. If you enjoyed this video, like the video below, subscribe to the channel, hit the notification bell, and comment your thoughts below on my Robinhood 2020 recap. And if you want to help the channel grow and reach more investors, get more access to me, and get direct answers to your investing questions, then join us over at patreon.boacademy.org. You'll be able to engage in our Discord channel where we share knowledge and research to help one another grow our wealth together. And I share my portfolio updates immediately to our patrons in our Discord channel. And of course, you will have a chance at winning $200 every month just for being a loyal and engaged patron. So if you're interested in all of that, join us over at patreon.boacademy.org. I hope to see you over there. Now let's hop in. So in 2020, Robinhood says it's been quite the year, and now we have to take a look. So there's 14 pages here, and we're going to walk through each one and discuss each topic. In 2020, Robinhood says that more investors started their journey on Robinhood than ever before. And they tell me congrats on being an early joiner. And I was customer 721,667. So I was pretty early. Not incredibly early, but pretty early. I joined Robinhood on May 16th, 2016. And I didn't even know that until I checked this report. I completely forgot when I joined. And actually, that reminds me, that day was soon after I finished my junior year in college, and it was only a few weeks before I started my internship at Medium.com as a software engineer. So it made sense that I joined at this time because I must have been interested in investing the money I was about to make that summer. But it turns out that I didn't invest for another 3 years because my first time that I bought a stock was Tesla on May 24th, 2019, 3 years later. 3 years. I don't know why it took so long to invest because I was making a whole lot of money as a software engineering intern for 2 years in 2015, 2016. And I was a full-time software engineer for 2017, 2018. And it wasn't until I left my job in 2019 that I decided to invest. I don't know why it took me so long. And it's kind of sad because I could have made so much more money had I invested earlier. But hey, that's life. You don't know what you don't know, and over time you learn more, and at some point you have enough information and incentive to dive in. And it turns out leaving my job and having lots of money from a business sale is what incentivized me, what galvanized me to invest for the first time. So that was May 24th, 2019. I purchased Tesla at a price of $199, and that was when people were saying that Tesla was going to go out of business, that they were going to run out of money. And I thought, hey, this is Tesla. They have lots of support. They have Elon Musk of the PayPal mafia. And I didn't believe that it was going to go out of business. So I bought 10 shares at an average cost of $198. And a year later, you've seen what happened. Tesla is now in the S&P 500, and their stock has split and gone way above $2,500. So I more than 10x my money in the year just by investing in something that people said was risky and was not worth my time. That's how you invest. The majority is always wrong. You have to think for yourself and you have to do your own research. So I looked into Tesla and I said, hey, this is a steal. And turns out I was right. And Tesla's sector is manufacturing, materials, and consumer goods. And if you don't know what Tesla is or you don't know how their stock works, we've covered Tesla in many videos on this channel. So if you're interested in that, go check them out. You can search bullacademy.org for Tesla and you'll find our videos. And if you don't know what a stock split is, we also have covered that in many videos. So go check that out because we broke it down so you understand that stock splits are immaterial, but they do have real effects on the perception of the companies. So go check that out, learn more about stock splits and Tesla. Moving on, page 5. And it said that I kept close to my investments. And on average, I checked my investments 7 days per week this year. So every day I check my investments. You don't have to do that. You don't have to check your investments every day, but I enjoyed looking at my stocks go up and down. And when they went down, I bought more. So when it went up, I just watched and said, when are you going to go down again so I can buy more? Because I know that stocks go up and down. We've covered that in many videos here. So when stocks went down, I was happy. When they went up, I was neutral. I was fine. I knew they're going to go up at some point, but I enjoy when they went down so I can buy more when I have money, as long as they weren't just dropping. So I check my investments every day because Robinhood makes it so easy to just open your phone in the morning and read some news on your companies. Do light research every day so you can stay up to speed on your investments. And I enjoy the app. It's a beautiful app. So that's why I checked every day. And it said that I made some trades. In 2020, I've made 999 trades so far this year, just shy of 1,000 trades. So I don't trade that often. There are people who trade many more times than this because they're day traders or swing traders. On this channel, what we preach is long-term bullish investing by practicing the bull mentality. The bull mentality is that we know what we invest in, we understand what we invest in, we believe in what we invest in, and we hold for the long term because that's how we build wealth in this country. That's how we give ourselves the best chance at success on the stock market. So I don't make many trades, and it might seem that 1,000 trades is a lot, but that's because what I do is when I discover a new company that I'm becoming bullish in, I buy a few shares just to watch it closer for a few days or a few minutes as I gather more research into the company. And then as I learn more things about this company, as I become more convicted in my thesis about the company's future, I buy a few more stocks and then I keep buying in small increments until I get to a point where I'm happy with my position. So for example, if I find a company that I'm interested in, I will buy 5 shares at once. And as I find more information that makes me more bullish, maybe I'll buy 100 in one trade and then maybe 50 more until I get to the point where it's a good percentage of my portfolio and I have enough information and I can move on to the next one. And I just keep doing more research. And if I keep finding new things that make me more bullish and more convicted, I either hold on to my position or in a few days or a few weeks when I get paid again, I add more by dollar cost averaging in. That means buying when it goes up and buying when it goes down. I just buy consistently into the companies that I'm really passionate about and believe in and want to hold for the long term. So that's how I get to 999 trades, even though I only hold about 8 to 12 stocks in my portfolio at one time, because I really like to just keep my portfolio tight and I can only be so passionate in a few companies. So now we can move on. And we have page 7, and it says you're just a little attached. Of the stocks you watched, you checked Forum Merger 2 the most, 1,049 times this year. So if you've been watching this channel for a while, you will know that I'm incredibly bullish on Tattoo Chef Inc., which is the leader in the frozen plant-based food sector, which was taken public by Foreign Merger 2, a SPAC, in October of 2020. I started investing in this company back in June. I bought 1,000 shares and I haven't touched those shares since. So I plan to hold this company for the long term, and the reason I checked this stock so many times this year was because I was covering it heavily. I was doing many videos every week on Tattoo Chef Inc., and I covered it from the time that it was announced that Foreign Merger 2, FMCI, was taking Tattoo Chef public, through the shareholder votes that took place to confirm the merger and approve it, and through the time that I interviewed the Chief Financial Officer of the company, the CFO, which you can go watch if you're interested in learning how Tattoo Chef Inc. plans to compete with the likes of Beyond Meat and other plant-based foods companies. So I believe that Tattoo Chef has a bright future in the long term, like all of my other companies that I'm bullish in, just like Net, Cloudflare, the leader in online security and infrastructure, and like Upwork, the leader in freelancing marketplaces, which I checked just 10 times less than FMCI this year, because Upwork was one of those companies that I got at an extreme discount. When everyone else was running away, I went in, did my research, and said, hey, this company is way undervalued. And that was last November in 2019. And just a year after I bought Upwork, the stock's valuation tripled. So yeah, I was looking to this company very much because I had to confirm my investment thesis in this company every day to make sure that I was right. And I just kept doing my research and kept becoming more bullish in it. So Net Cloudflare accounts for 15.7% of my growth portfolio, which I've covered in a previous video just this week. So if you haven't seen that, if you haven't seen my $250,000 growth portfolio update, go watch that so you can learn more about my investment portfolio and how I invest. And Upwork accounts for 7% of my growth portfolio, while Tattoo Chef Inc., what was formerly FMCI, accounts for about 10% of my growth portfolio. And Tattoo Chef Inc. is actually one of my non-tech investments, if not the only one. Moving on, page 8 of 14, it says that you made some new discoveries this year. You added 81 companies to your watch list, including Macy's, Inbridge, and Zillow. And that's right, I actually invested in Macy's early on during the pandemic, during the recession of 2020. I did pretty well on that. I didn't know if I wanted to hold it for long term, but I did initiate a position and decided that it wasn't for me for the long term, so I let it go. And I forget what this company is about, but definitely Zillow. Zillow is a great company. I'm more bullish in Open Door, but I do like Zillow. And Robinhood, things that I think outside of stocks, because I also traded some crypto this year. I bought 3% of one Bitcoin, and that's been doing pretty well. My Bitcoin position, which I invested $300 in, now sits at $1,000, and it's up 326% today. So that's a gain of about $775, and my average cost for this position was $7,773. So I got in at a pretty good price, and maybe I should have bought a whole Bitcoin, but at the time it didn't make sense for me. I'm not a bull in Bitcoin. I don't really believe in it, and I don't think it's going to succeed, but my position that I'm telling you about here is a hedge in case I'm wrong, because you don't want to be an arrogant investor. Things can go any way, so sometimes even if you think a different way and you think that something's going to fail, you should consider hedging your beliefs, hedging your positions, hedging your investments in case you're wrong, because you can be wrong, and if you don't prepare for that, it can be a spectacular devastation to your portfolio. And I've been through that. I've been hit hard because I was arrogant early on, just this year in 2020, and I lost thousands of dollars because I didn't hedge my position. I thought I knew all there was to know about a position and disregarded counterpoints, and that was a devastatingly costly mistake on my part. So I've learned my lesson, and I hope that if you're an investor, you also learn to hedge, to realize that you are not always going to be right. There will come a time when you're wrong, and if you are not prepared for it, it will hurt. So that's why I have crypto in my portfolio. I don't believe in it, but I might be wrong. And if I have a few Bitcoin,
and Bitcoin takes over in the future, I will have enough money to rebuild my wealth. I come from a poor background and I'm here now. So if I have to do it again, I'll be able to, as long as I have a small position in the future. Moving on, page 10 of 14, I chose stocks in 8 sectors, from manufacturing and materials, that's Tesla, to consumer goods, that's Tattoo Chef Inc., to business, that's Cloudflare, SBE, ChargePoint, finance, that's Triterus, TRIT, hospitality, that's Open Doors, Zillow, Redfin, energy and water, that's SBE, ChargePoint, healthcare, that's Illumina, CRISPR, and then we have tech, media, and telecom, that's T-Mobile, that's Jumia, that's Velodyne Lighter. So many other investments that I made in tech, media, and telecom because that is my area of expertise as a software engineer. That's what I know best. And so most of my stocks, most of my investments are in tech, media, and telecom. And you got paid a little extra, so dividends. You know I do not like dividends at this stage in my life. Remember, there's 2 stages to wealth. There is building the wealth, and then there's maintaining the wealth. People mistake dividends and use them in the first stage, which is building wealth. Dividends, however, are not for wealth building. They're for those people who already have wealth, who want to maintain their wealth and live off of their wealth. So I don't like dividends. If I had invested my $23,000 that I started with, or my $40,000 that I've invested so far, I would have only got about $2,000 more dollars in the last year, and best case, $4,000 in the year. If I chose the top dividend yields, 10% or so, and that's a far outlier because most dividends are around 5% yield to 6% in a usual best case, and you mostly are going to find companies that are around 4, maybe 3%. But if I had chose the top of the top, I would have got a measly $2,000 or $4,000 in yield, which is nothing compared to the amount of growth that I've seen in my growth portfolio from appreciation. The first stage of the wealth journey is about appreciation. You should be focused on appreciation, not yield, not taking out cash. Because the cash, as you can see here, $90, $80 is nothing. Dividends will keep you poor, and that's why I don't invest in them. I want to see my money grow. I want to see 20% a year, 30%, even 50 or 100% a year from the appreciation in the value of my assets. So dividends don't do that for you. Sure, you can get some passive income, as I said with air quotes. It's not worth it though. That passive income is going to keep you poor. Dividends are great once you have wealth. So let's move on. I can talk about this all day, but if you don't know what dividends are, we've covered that in another video. I broke down what dividends are, what their value is, and what they bring to the table. So dividends are not absolutely bad and they're not absolutely good. Nothing is an absolute in investing. You have to understand the tools and the vehicles that are available to you and use them accordingly. Don't just listen to the hypers on YouTube that say, oh, get these top dividend stocks and build passive income, because those might not be in your best interest. Sure, it will help those YouTubers get lots of views, but it's not going to help you build your wealth. But if you already have wealth, then hey, more power to you. Go invest in the top dividend stocks and live off of the distributions that you get from your investments. But most people getting started investing today are poor, just like I was when I joined, and I still am poor. So I'm not investing in dividend stocks because I want to be rich, and then I can live off of that dividend income. So that's my little soapbox on dividends. Let's move on to page 12 of 14. And it says, by the way, you're a trendsetter. You referred 8 friends this year. I actually referred more, but we can take this as what it says. And that's great. I'm glad I could refer some new people to invest in. And while it's less than what I wanted to do this year, I was still able to help some people get started. And that makes me happy. And I hope that if you're watching this video and you're one of those 8 friends, I hope that you're doing well too and that you've had great growth this year. So I'm wishing all of those 8 friends the best and into 2021. Moving on to page 13 and a few words from legal and compliance, and that is it. Thanks for making us a part of your investing journey. Here's to 2021.
And that's the same message from bullacademy.org. Thank you for making bullacademy.org a part of your investing journey. I hope that this channel is helping you learn how to invest better and build long-lasting sustainable wealth. And I hope that you are practicing the bull mentality, because that's how we give ourselves the best chance of success on the stock market. In order to live the life that you want to and retire on your terms, you have to make the choices that are going to help you get there. And that often means going against the grain, going against the majority, because the majority is always wrong. They might tell you pick dividend stocks. They might tell you just invest in index funds because you're not competent enough to pick your own companies. They're lying to you. If you want outsized, unusual returns, you're going to have to take outsized, unusual risk. That's just how it is in anything. You don't get to where you want to go by being safe and staying in your comfort box. But with that said, if you just want to build wealth slowly and into retirement, if you just want to invest in index funds, I'm not going to judge you. I'm just going to tell you what it is. You're going to get average, mediocre results. That's just the truth. It's not my opinion. That's just the numbers. It's all about the numbers. So for me, I'm choosing to invest in high growth companies that are going to help me build my wealth by enabling me to benefit from the appreciation of the value of my assets. That's what we discuss on this channel. And I hope that if you're just getting started, that you will go take a look at our previous videos, breaking down the entire journey from what stocks are to what stock warrants are, to dividends, to inflation, and the benefits of investing over saving your money in crappy savings accounts, because the banks are ripping you off. They're stealing your money and benefiting from their investments. They're doing what you should be doing if you're not invested. So that's my 2020 recap. I hope that you enjoyed this video. If you did, like the video below, subscribe to the channel, hit the notification bell, and comment your thoughts below on everything that we discussed in this video. And if you haven't seen your 2020 Robinhood recap, go check it out. Look in the description below for a link, and for a link to many of our other videos that might be of help to you. And of course, if you want to help the channel grow and get more access to me and get direct answers to your investing questions, then join us over at patreon.bullacademy.org. You'll be able to engage in our Discord channel where we share knowledge and discuss the SPACs and stocks that we're all investing in to help one another build our wealth together. And you will have a chance at winning $200 every month just for being a loyal and engaged patron. So if you're interested in all of that, I hope to see you over at patreon.bullacademy.org. I'm Lincoln with bullacademy.org. Thank you again and have a great day.